Welcome to the Introduction to Compensation Compliance. Today's training will focus on the core fundamentals of compensation compliance. Our agenda for today will cover 4 key topics. 1. Introduction. 2. Regulations and compliance. 3. Roles and responsibilities. 4. Key concepts. Let's get started. Introduction. The compensation compliance process consists of 2 distinct processes. 1. Direct charge process and 2. Compensation certification process. The direct charge process consists of commit effort. Effort for key personnel is committed to sponsors in proposals and reconfirmed at the start of the award. The program team estimates the effort of all personnel, and this effort must be met over the award period. Direct charge, labor costs, including salary and fringe benefits, are charged directly to grants based on committed effort, adjusted for any salary caps. The compensation certification process consists of regular review. Variances between actual effort and labor charges are corrected via cost transfers to ensure they match. Certify compensation. Program directors or principal investigators, PIs, certify compensation quarterly based on first-hand knowledge of actual activities. The direct charge process and the compensation certification process together drives the compensation compliance process. Before we move on, let's take a minute to think about what we've covered. Which of the following best describes the purpose of the compensation certification process? Select the answer that makes the most sense to you. The next topic we will cover is regulations and compliance. What is compensation compliance? The American Heart Association receives funding from external organizations, including federal and state governments. With this funding comes the responsibility to comply with federal requirements and cost principles. What are cost principles? The Uniform Guidance, also known as 2 CFR Part 200, establishes uniform administrative requirements, cost principles, and audit requirements for federal awards to non-federal entities. All costs expensed on a government grant must adhere to the 4 key components of cost principles, which are allowable. Expenses must be necessary, reasonable, and conform to award limits. Additionally, they must be incurred during the budget period and follow established organization's process. Allocable. Goods or services charged must benefit the specific project in accordance with the relative benefit received. Reasonable. Costs should be ordinary, necessary, and not exceed what a prudent person would pay. Consistently treated. Costs should be treated the same in similar situations. For government-funded projects, costs should either be charged as a direct charge or as part of indirect costs, but not both. Before a cost can be charged to a government grant, the cost must meet all 4 criteria every single time. Uniform guidance requires that personnel expenses meet standards for being reasonable, aligned with positions, and documented properly. If these standards are met, the American Heart Association is not required to provide additional support or documentation for the work performed, except for total hours worked by non-exempt employees. In a grant proposal, we offer an effort. Essentially, we propose to dedicating a certain amount of time to the project. At award time, this offer becomes a formal commitment. As the project progresses, we charge salaries to the grant based on that effort. Grantors, particularly government agencies, periodically check in to ensure 2 key things. Are we devoting enough effort to justify the salary we've charged? Even if we're not charging a salary to the grant, are we fulfilling our effort commitments? Compensation compliance is the process used to document and support an individual's time charged, cost shared, or committed to a government grant. We report this effort both as a percentage and a dollar amount, always ensuring the compensation does not exceed 100% of the individual's salary paid by the American Heart Association. The key processes include certifying effort and confirming payroll. All of this is tied to the individual's institutional base salary, or IBS. This is based on a reasonable estimate, not a 40-hour work week or other standard work week. Let's take a quick pause to check your understanding. Answer the following question before we move on. What is institutional base salary? IBS is the annual compensation the American Heart Association pays for an employee's professional activities. It includes both funded activities, such as externally funded programmatic activities, and non-funded activities, such as business unit oversight, committees, internally funded programmatic activities, grant proposal development, fundraising. Importantly, institutional base salary, or IBS, does include things like supplemental payments, one-time or recurring, incentives, bonuses, expense reimbursement, or other supplemental compensation, payments from other organizations or income that individuals are permitted to earn outside of their institutional responsibilities, such as consulting. If a payment is excluded from IBS, it means it cannot be charged to a government grant. Next, let's discuss cost share. Under the Uniform Guidance, we define cost share or matching funds as a portion of the project or program costs that aren't covered by the federal government and therefore covered by some other source. Compensation compliance regulations. We must meet several standards when documenting compensation compliance. Internal controls. Our internal policies ensure that compensation expenses follow proper procedures. Official records. All records must be incorporated into the official system for future reference. Accurate reflection of effort. Employees must account for 100% of their compensated activity, no matter how many hours they work. Integrated reporting. Federal and non-federal activities must be tracked together to ensure comprehensive reporting. Policies and procedures. All documentation must strictly follow the American Heart Association's accounting practices for compensation. Salary distribution. For employees working on multiple grants, salaries must be allocated appropriately across projects. Click on each standard to learn more. Failing to comply with these regulations can result in significant consequences, such as refund of funds to grantor, future awards being withheld, special monitoring by grantor, temporary withholding of payments, audit findings, corrective action plans, being designated a high-risk organization, loss of expanded authorities, payment of punitive damages. Click each number to learn more. You've covered a lot so far. Great work. Now let's pause for a quick knowledge check to reinforce what you've learned. The roles and responsibilities within the compensation compliance process are essential. There are four key concepts that form the foundation of how compensation compliance works. The four concepts are: 1. Effort collection and salary distribution. 2. Direct charging. 3. Pre-certification review. 4. Review and certification. Effort collection and salary distribution, along with direct charging, are part of what we call the direct charging process. The second pair, pre-certification review and certification, are part of the compensation certification process. There are several key players involved in ensuring compliance. This includes the implementation team, which consists of the principal investigator or program director, the operations manager or equivalent, direct charging coordinators, and effort coordinators. Additionally, we have Office of Funded Programs Finance Human Resources, or HR. Each of these roles plays a vital part in making sure that compensation is aligned with the work being done. Let's take a closer look at some of the key contributors. Click each team member to learn more. Let's start with the Principal Investigator, or PI. The PI, or equivalent, has a few critical responsibilities in this process. First, they need to understand their own level of effort and that of their staff, including what's been committed, charged, and reported across all applicable awards. Second, they should review, initiate corrections if necessary, and electronically certify government grant compensation reports. And lastly, they should routinely review salary charges on those awards with the operations manager and effort coordinators, and identify any effort-related changes, working with the operations manager to notify finance if corrections need to be made. The operations manager, or OM, plays an essential coordinating role. Here are their key responsibilities. They monitor and track all direct charging requests for all applicable awards. They communicate any significant effort changes to HR through the direct charging or cost transfer process. They also work with the Office of Funded Programs if any changes require grantor notification or approval. They review salary charges with the PI and ensure that any corrections or updates are handled in a timely manner. Also, they play a major role in ensuring that effort certifications are completed during the certification period. Next, we have the effort coordinators. This individual works closely with the PD or PI at the department level. They're responsible for coordinating compensation compliance and reporting. This role involves understanding federal compensation compliance requirements, monitoring effort commitments, reviewing reports to ensure the charges match the actual effort expended. It's important to note that, in some cases, the operations manager and effort coordinator could be the same person, depending on the size or structure of the grant or department. The effort coordinator's specific responsibilities include reviewing monthly reports to determine if any cost transfers or adjustments to direct charging are needed, checking effort certifications for accuracy based on first-hand knowledge, discussing staff activities and work performed, particularly as it relates to initiatives under their purview. And finally, they report back to the operations manager and PI to validate the work of their staff. Now let's dive into the responsibilities of the direct charging coordinator. The direct charging coordinator is responsible for submitting direct charging requests for their assigned population. Often, a staff member might work on multiple grants, and to avoid multiple submissions to HR for that individual's effort, we assign a direct charging coordinator. If the staff member is working on a government grant, the operations manager takes on the role of the direct charging coordinator. In cases where they are involved in multiple government grants, the operations manager is determined by first considering the staff member's home department and then by evaluating their effort levels. It is important to note that the operations manager and direct charging coordinator roles could be filled by the same person, depending on the structure of the business unit. The direct charging coordinator has a few key responsibilities. Submit direct charging requests to HR for processing. Coordinate with other operations managers, direct charging, coordinators, and department administrators to ensure that accurate salary allocation updates are submitted to HR in a timely manner for the population they are responsible for. Now, let's move on to the Office of Funded Programs, OFP. The OFP coordinates with the implementation team to inform grantors of any changes in effort exceeding 25%, as required. After grantors approve these changes, OFP updates the effort commitments in the tracker to reflect the new commitment levels. Other important roles of OFP include reviewing direct charging requests, maintaining American Heart Association's procedures for government grant compensation compliance, monitoring compliance with AHA procedure for government grant compensation compliance, providing guidance on AHA and grantor requirements, following up with the PI or PD and the implementation team to ensure effort certification is completed in a timely manner. Next, we have finance and HR. Some of their key roles include establishing accounting policies related to rate of pay, payroll frequency, and payroll accrual, ensuring certified compensation reports for government grants align with the financial system's records. Let's check your knowledge of roles and responsibilities. Use your mouse to match the roles with corresponding responsibilities. Now, let's move on to key concepts. There are 4 key concepts in compensation compliance. The 4 concepts are 1. Cost share. 2. Salary restrictions and limitations. 3. Cost transfer. 4. Certification periods. Click each concept to learn more. First up is cost share, which refers to the portion of project costs that are not funded by the awarding agency. These costs can be direct or indirect, and they can be mandatory or voluntary, committed or uncommitted. It's important to note that funds used for cost share cannot come from other government agencies. As with any cost charged to a sponsored award, cost share expenses must be allowable, reasonable, allocable, and consistently treated according to cost principles. You'll need to track cost share under the following circumstances. Mandatory committed cost sharing. When the awarding agency grantor requires cost sharing as a condition of the award. This must be tracked and may need to be reported. Note, this type of cost sharing must be included in the proposal. Voluntary committed cost sharing. If the American Heart Association voluntarily pledges cost sharing in the proposal, it becomes a binding requirement. This must also be tracked and may require reporting. Voluntary uncommitted cost sharing. This type of cost sharing is not included in the submitted proposal and does not require tracking or reporting. Over-the-cap salary. This is the portion of an employee's salary and benefits that exceeds the regulatory maximum imposed by the grantor. Over-the-cap salary cannot be used to meet cost-sharing requirements because it's considered unallowable by the grantor. However, it still needs to be tracked for accurate compensation certification. We'll talk more about over-the-cap salary later. If cost share needs to be tracked, you'll need to work with finance to establish a cost share project. If the cost share involves salary, this project should be used to direct charge cost shared effort. It's also important to remember that over-the-cap salary requires its own separate project from other types of cost sharing. Moving to salary limitations, let's start with the NIH salary cap. The National Institutes of Health, NIH, salary cap sets a limit on the maximum salary an individual can receive from a U.S. Department of Health and Human Services, or DHHS grant. Here's how it works. An individual's effort on a project is applied to both the portion that is at salary cap and the amount of their institutional base salary, IBS, that exceeds the cap. The portion at or below the cap is directly charged to the government grant, while any salary over the cap is treated as cost share and charged to a companion account. Keep in mind, the NIH salary cap is subject to change annually. Let's look at an example to clarify this. Consider a full-time employee, or one FTE, who dedicates 50% effort to a DHHS grant. The salary charged to the grant will be capped, and any amount exceeding the cap will be allocated as cost share. Now, let's look at a part-time employee, employed as a zero point 0.5 FTE, who contributes 30% effort on a DHHS grant. We adjust the base salary and consider the salary cap for the part-time employee. That adjusted salary cap is then reviewed by effort to determine the amount charged to the project versus over the cap. Moving on to the National Science Foundation, NSF, salary limitation. NSF has a 2-month salary limit. NSF limits the salary compensation requested in the proposal budget for senior personnel to no more than 2 months of their regular salary in any 1 year unless additional approval is granted by NSF. It's crucial to remember that staff who are paid from multiple NSF grants cannot rebudget to exceed this 2-month salary limit unless specifically approved by NSF. The total salary from all NSF grants cannot go beyond 2 months without explicit, written NSF approval. Next, let's discuss cost transfers. A cost transfer is the movement of expenses from one funding source to another. This type of financial transaction is used to either correct an error in the original funding source or make necessary adjustments. For example, if payroll was charged incorrectly to a government grant, a cost transfer would be used to correct the error. While cost transfers are sometimes necessary in grant management, it's best to minimize their occurrence by ensuring accurate and timely effort collection and direct charging from the start. If you'd like to learn more, we offer additional training on cost transfers and the process. Time for another quick check-in. See if you can apply what we've just covered in the next question. Lastly, let's dive further into the certification process. The American Heart Association has 4 review periods where we create, review, confirm, and attest government grant compensation reports. These periods align with our fiscal quarters and payroll schedule. 1. July through September. 2. October through December. 3. January through March. 4. April through June. We conduct the compensation certification process at the end of each fiscal quarter. Thank you for attending the Introduction to Compensation Compliance training. If you have any questions, please don't hesitate to reach out. Please review our other training material for more information.